G'day guys, it's Jake here. Nothing in this video is financial advice. Please do your own research when it comes to investing. Alright, let's go. So the topic for this video is the retail sales for the US and also looking at some consumer data to see where the average person is in terms of spending and how they're holding up in this current economy. So last night we had the retail sales month over month numbers come out. And as you can see here, we had the retail sales data. It's monthly. Let's click on that one. So we had a consensus of 0%. So a slowdown from the previous month, 0.3 down to 0. And we hit consensus at 0%. So we are slowing down. And retail sales control group, which doesn't give us proper data at all. So I have to skip over that one. You can get a really clear consensus. But yeah. Anyway, then we had retail sales excluding automotives, and we actually had an increase. So if you get rid of the automotive sector, we actually had a little increase from 0.1% to 0.4%. So we actually are quite, slowly, steadily growing on this factor, on this number. We basically take out the automotive car sales, and you can see compared to that data, to normal retail sales, includes everything. We have big discrepancy, which takes into account people actually wanting to go and buy new cars, which is slowing down significantly in this current environment, because they really can't afford to do that, especially at these current interest rates, getting car loans and having enough on their plate as it is. So yeah, the data came in, like I said, month over month, lower than expected. If you count for whole every single sector, and then if you take out automotives, we did see some growth. Okay, so I want to pick up this tweet by a global markets investor. The US consumer is not strong. Large US banks net charge-offs. Losses on loans marked as uncomfortable have increased to over 5 billion, the highest level in history in the last 2 years. This has been driven by lower income customers, which have been hit by constantly rising prices. See proper chart here. Loans marked uncoverable rise at large banks. So we have JP Morgan in dark blue, light blue Citi, and medium blue Wells Fargo. And we are on the uptick, which is quite interesting to see this data coming in. And yeah, the bank, I did do a video yesterday talking about the banks and seeing some cost cuts and not looking good with forward guidance earnings. So we could see some slowdown in the banks. And it reflects on losses on loans. And yeah, it doesn't look very good according to this Bloomberg data chart. Another tweet by a global markets investor. Affordability in the US is terrible. US consumers see home buying conditions be the worst in the entire American history. We'll have to wait and see. Buying conditions for house index has plummeted to 22, 50% below 1980s levels. Conditions for large household durables and vehicles have also fell. So you can see this is the US Michigan buying conditions, I believe. And yeah, the estimates vehicles 57 in blue, 85 is the whites, and 22 is in orange. And for houses are orange, vehicles are blue, and white large household durables. And the buying conditions are decreasing pretty rapidly. So affordability is definitely hitting a lot of people. And we're seeing it in this chart here, going down from 2020 to 2024, big decrease there. You saw the same thing happen back in the late 70s when they had high inflation. We had a big drop off. And we're seeing it again back to these levels of the early 80s. So yeah, very interesting data to look at to give you an idea of what the consumers are like. I'm not just looking at the economic calendar, but looking at other charts for surveys. And yeah, it's very telling what's really happening out there. Next one. So the capacity letter, just in, more than 33% of US consumers are now worried about making ends meet over the next 6 months. This includes 30% of Americans earning $150,000 or more annually, according to the Fed survey of 5,000 respondents. Over the last 12 months, 43% of all surveyed consumers and 37% of high-income individuals cut their discretionary spending. The worst part, 1 out of 3 Americans with salaries of less than $40,000 a year have trouble paying their bills. Consumers across all income groups are feeling the pain of inflation. So we have a chart here, how US consumers manage financial stress over the last 12 months, and more than a third of high earners, which is above $150,000 a year, okay, cutting back on spending. Interesting. So you've got cutting discretionary spending to entertainment or dining out, 43%, and 37% for the higher income. So low income versus the high income. You obviously see the low income are cutting back more. And so not much difference between the high income people. We see cutting essential spending, for instance, food or medical care. We have the difference between the two. We have borrowing for friends or family. It's going to be a lot less, but still sort of interesting to see that data nevertheless. And we just get lower and lower as it goes down. And yeah, it's quite telling what's really happening. And this is the Federal Reserve Bank of Philadelphia's data. And this just surveys 5,000 US consumers. It gives you a rough idea what the rest of the 300 million plus people are really facing at the moment. But yeah, it's an interesting way to look at things nevertheless. So that's that data. And yeah, I've just scrolled down a little bit more and you can see another global market investor tweet. US economy has 39 months of CPI inflation at 3% or above. Jobs overstated in 2023 by 730,000. 346 big bankruptcies in 2024, most in 14 years. I'll click into it. 2.1 trillion excess savings has gone in 3 years. 1.5 million jobs lost in 6 months. I only talk about full-time jobs. Number 6 is $34.8 trillion national debt record. So as the government going further and further in debt, we're just it's an unsustainable path. We keep running up into deficits and not, managing their spending quite, responsibly. And this gets us into bigger debts. And they're running something like, I think it's $1 to $2 trillion per year. Or actually I think it's about 1 trillion per 100 days or so. So it's actually more. It's depending on what data you get. They're running from anywhere from 2 to 3 trillion a year in deficit, and the debt increasing, and so they've got to keep refinancing their debt every so often at high interest rates, which is a burden on the debt, which they can keep printing money to keep repaying it down, but it's on an unsustainable path fiscally, and the Federal Reserve Chairman Jerome Powell said that. So yeah. Anyway, we have to see what happens there. It's going to be a problem in the future, that's for sure. And inflation will just keep, it'll keep going up over time. It really depends on their spending to really monitor the way things are heading when it comes to GDP and M2 growth. So yeah, all right, we'll keep this one pretty short. Just going over retail sales numbers and the overall condition of the consumer, looking at a couple of surveys and charts and seeing where things are heading in the current environment, what the consumer is really feeling, the low income versus the high income earners as well. And we are seeing a slowdown in retail sales month over month. But if you exclude automotives, we did see an uptick, which is quite interesting to see. So very sort of neutral overall, if you really account for that data. But yeah, if you take over a longer period of time, definitely affordability, housing, going out, it's gone a hell of a lot higher inflation-wise, and people are really cutting back. If you look at the average consumer, this is a 5,000 survey, but if you look at over the whole country in America, it seems to be pretty stagnant. So yeah, all right. I hope you enjoyed the video overall, and just want you to smash the like, comment your thoughts below, and subscribe to stay updated. And I'll catch you in the next one. Cheers.